As on 31st March 2013, the following balances existed in a firm's cost ledger. You have the balances in stores ledger control account, work in process control account, then finished stock ledger control account, manufacturing overhead control account, and cost ledger account with credit balances. During the next 3 months, the following items arose. Finished product at cost so much, manufacturing overhead incurred, raw materials purchased, factory wages, indirect labor, cost of sales, material issued to production, sales return at cost, material returned to suppliers, manufacturing overhead charged to production. You are required to pass the journal entries, write up the accounts, and schedule the balances, stating what each balance represents. Okay, so now this is the background. First, let's get started with the journal entries. Journal entries, you have to start from here because these are all only the opening balances. The first item is finished product. So how will you have finished products? Only when the production is completed. That is, anything that you are creating as finished product is possible only when you transfer it from work in process. So the finished product is represented by the finished stock ledger control account. So that account should be debited, and this is not possible without transfer from work in process. So work in progress account should be created to the extent of this amount. So let's capture the first entry. It is finished stock ledger control account. It will be debited, and the amount involved is 2,10,835, and credit will be to work in progress control account. Okay, so that's about the first item. The second one is manufacturing overhead incurred. So that would come under manufacturing overhead control account. Since it is paid or say assumed to be credit, in either way the credit entry will not pass or will not say cash or bank or say outstanding. Rather, we will credit it to cost ledger control account in non-integrated accounting. Okay, so the second entry is manufacturing overhead control account will be debited, and credit will go to cost ledger control account, and the amount is 91,510. So that is taken care. Number 3 is raw material purchased 1,23,000. It will be routed through in stores ledger, and for credit it may be either cash or credit, and we will be routing that through cost ledger control account. So item 3 is going to be stores ledger control account debit. Now this is instead of saying the raw material purchased, okay, and credit will go to cost ledger control account, and the amount involved is 1,23,000. So that is taken care. Number 4, you have factory wages 50,530, indirect labor 21,665. Now both come under, both the items would come under say wages. It means we can park both the items under wage control account, and credit can be cash or say credit outstanding, but it will go to cost ledger control account. So let's capture that here. Item number 4, wages control account debit, and credit will go to cost ledger control account, and it's going to be a summation. It's going to be a summation of 50,530, and let me have that 50,530. Let me just correct it. It's going to be 50,530 plus 21,665. So we get 72,195. Now of this, what is directly taken for production is 5530, and what is indirect labor that would go to manufacturing overhead control account is 21,665. It means we have to credit the wages control account, and we have to debit work in progress and manufacturing overhead for the wages itself. Okay, so as an extension, first I will debit work in progress. Okay, work in progress control account debit, and that would be for 50,530, and credit would go to wages control account, That's for 50,530. It means we have the remaining 21,665 where the debit would go to manufacturing overhead control account because it is indirect in nature. So we'll say manufacturing overhead control account debit, and credit should go to wages control account, and the amount involved is 21,665. Okay, so we have taken care of that aspect. Then we have cost of sales. So how you can have entry in cost of sales? Only by transfer from finished products, right, or finished goods. It means your cost of sales account will be debited and your finished stock ledger account have to be credited. So let's capture that. Item number 5, it's going to be cost of sales account debit. Amount is 1,85,890 and credit should go to finished stock ledger account. Okay, it is 1,85,890. Then we have next item, material issued to production. It means to that extent work in progress will increase and stores ledger balance should come down. So let's capture that. Item number 6, work in progress control account debit, that should increase by 1,27,315 and credit should go to stores ledger control account. So we'll say to stores ledger control account so much. So that is taken care. Then what else we have? Sales returned at cost. It means finished products are coming back, so that should be debited, and cost of sales should come down, so that should be credited. So let's have item number 7. It is finished stock ledger control account, that has been debited, and cost of sales is coming down, that is credited, and it is 5,380. So that is taken care. Anything else? Yeah. Material return to suppliers. So when you return the material to suppliers, to that extent stores ledger control account should come down and supplier account should be debited. Here we have supplier account in the form of cost ledger control account, right? So item number 8, we have to say cost ledger control account debit and credit should go to stores ledger control account, and the amount involved is 2,900. Okay, then we have manufacturing overhead charge to production. It means to the extent of 77,200 the work in progress will increase and manufacturing overhead would decrease. So we'll have item number 9, work in progress control account debit to manufacturing overhead control account, and the amount involved is 77,200. Right? So now we have passed all the journal entries. Now let us go and write up the accounts. We'll start one by one. So these are all the journal entries we have. We'll start one by one. First, let's have what is known as the cost ledger control account. So let's go and pick up the entries that have link with cost ledger control account. So here if you notice, you have 91,510 to the credit of cost ledger control account on account of manufacturing overhead control. So we'll say by, but before that, what is the opening balance? Let us not forget that the opening balance is credit of 6,65,220. So let's capture that. It's going to be by balance brought down. It is 6,65,220. Okay. Then the items which we have seen, we have to pick up this, that is manufacturing overhead control. We'll say by manufacturing overhead control account, and what is the amount? Let's pick up from here. It is 91,510. So that has been taken care. Then let's check whether there are any other entry. Yes, we have something from stores ledger also, 1,23,000. So we'll say by stores ledger control account, it is this 1,23,000. Then we also have something from wages control. So we'll say by wages control account, and the amount involved is this 72,195. Then let's check whether we have any other items on the debit. Probably, let's see, we have one over here, okay, where it has been debited. So let's go on the debit side. We'll say to stores ledger control account, and what is the amount involved? It is this 2,900. Okay, so I think more or less we have closed this account, or we have completed. Let's do the totaling. On the credit side, this is the total, a higher amount, so carry that over here, and it means here you have a balance that is 951,925 minus 2,900. You have a balance of 9,49,025. So we'll say this is to balance carried out. Okay, so this would go to trial balance. We have to keep this in mind. Then the second ledger which we are going to have is stores ledger control account. Again, go to the entries and pick up all items which have link with the stores ledger control account. But before that, capture the opening balance. What is the opening balance? It is so much, 3,01,435. So we'll say to balance brought down, it is 3,01,435. Now we should capture all items related to that particular account. So if you notice here, you have to cost ledger control account 1,23,000. Let's capture that. It is to cost ledger control account, and the amount involved is this 1,23,000. Let's go and check whether any other entries we have related to stores ledger. Yes, on the credit, work in progress control account. So we'll say by work in progress control account, and the amount involved is 1,27,315. Then let's check whether we have any other. We have one more with a credit of what? Cost ledger control account. So we'll say by cost ledger control account. And how much is that? It is this 2,900. Okay, now let's do the totaling. On the debit side, it is 4,24,435. It means here we are going to have a balancing figure minus 1,27,000 minus 2,900. So the balancing figure is 2,94,220. Okay, so this is by balance carried down. This is what going to figure in your trial balance. What are the other accounts we have? Let's go and see the journal entries. We have many other accounts, like we have this finished stock ledger, then there is manufacturing overhead control, wages control, work in progress control. Okay, then we have cost of sales. We have yeah, more or less. So if we cover all this, then I think we'll be able to prepare our trial balance. So let's move to the next set of accounts, work in progress control account. So what are the items we have linked with work in progress control account? Let's start. The first entry, buy finished stock, but before that the opening balance. Opening balance is so much, 1,22,365. So we'll say to balance brought down, it is 1,22,365. Then we'll give effect for this. That is we have to say buy finished stock ledger account 2,10,835. Okay, so we'll say buy finished stock ledger control account, and the amount involved is, let's pick up from here, it is 2,10,835. We have to check whether there are any other entries. Probably here nothing. because our focus is on work in progress control. Yes, here it has been debited 50,530 with credit to wages control account. So here we say to wages control account, and the amount involved is 50,530. Then do we have any other? Let's check. Yes, here we have to stores ledger control account. So we have to say to stores ledger control account, and the amount involved is 1,27,315. Then do we have any other? Yes, we have this one to manufacturing overhead control 77,200. So we'll say to manufacturing overhead control account, the amount involved is this 77,200. Okay, so now let's do the totaling. On the debit side, total works out to 3,77,410. So let me carry that total over here. It means here I have a balancing figure, and it is 1,65,575. We say this is by balance carried out, and this is what we are going to capture in trial balance. Then we have finished stock ledger control account. Let's go and check the opening balance first. The opening balance is 2,51,945. So let's capture the opening balance. We'll say opening balance to balance brought down is 2,51,945. Then we'll pick up the items that has linked with finished stock control account. If you take this one, yes, finished stock control account has been debited and the credit goes to work in progress control account. So let's capture that over here. We'll say to work in progress control account, and the amount involved is this much, 2,10,835. Then let's check whether there are any other items with link with finished stock ledger control account. Probably here, yes, finished stock ledger control account to cost of sales. So we'll say it's going to be to cost of sales account, basically the return that is taking place, and the amount involved is 5,380. Okay, any other item? No, our focus is on finished stock, right? And yeah, here we have one with a credit, so it is credited by debiting the cost of sales. So here we say by cost of sales control account, and the amount involved is 1,85,890. So now let's do the totaling. If you do the totaling, here you get 4,68,160. Let's carry that over here. It means here you are going to have a balance, and it is 2,82,270. So this is nothing but the balance carried on. Next, there are some more accounts. We have to open this manufacturing overhead control account. So let's get started. First, the opening balance, if anything. Yes, there is a opening balance, that too on credit. Okay, so we'll say by balance brought down. By balance brought down, it is 10,525. Now let's identify the items that is linked with this manufacturing overhead control account one by one. Yes, here we have debit to cost ledger control account. We'll say to cost ledger control account, and what is going to be the amount we can pick up from here. It is this 91,510. Okay, then do we have any other accounts linked with manufacturing overhead control? Yes, this one with a link to wages control account 21,665. So we'll say to wages control account, and it is 21,665. Then any other entries? Let's check. our focus is on the manufacturing overheads control. Okay, yeah, probably this one. That is on credit we have to say 77,200 by debiting the work in progress control. Okay, so we'll say by work in progress control account. Okay, and the amount involved is this 77,200. So now let's do the totaling. On the debit side, the total works out to 1,13,175. We'll take that to credit. It means here we have a balance 1,13,175 minus 77,200 minus 10,525. So we have the balance of 25,450, and this is by balance carried on. This is by balance carried on, and it's a balancing figure which we'll take to trial balance. Okay. Then we have this wages control account. Let's capture the items related to wages control account. What are the items we have? I think, yeah, number 1, 2, 3. So all three we have to pass now. Let's do that first. The first one is to cost ledger control account. To cost ledger control account, what is the amount? It is 72,195. Then the credit goes to number 1 work in progress control account, and the other one goes to manufacturing overhead control account. Okay, so work in progress control account, what is the credit? It is say here 50,530, and for manufacturing overhead control account the credit is 21,665. Now if you total this should get tallied automatically. Okay, so that has been taken care. Then we have this important cost of sales account. Let's pick up the items related to cost of sales. Number 1, here we have cost of sales debit to finished stock ledger 1,85,890. So here we say it is to finished stock ledger control account. And what is the amount involved? Let's pick up. It is 1,85,890. Now something has been returned back which had gone back to finished goods. So we say by finished stock ledger. Let me put it here, by finished stock ledger control account. And what is going to be the amount? We have somewhere here, right? It is this 5,380. So we are going to have some balancing figure. For that, let me do the total. Total is same, 1,85,000. It means over here we have some balancing figure, and it is 1,80,510. Okay, so this is by balance carried down. So now almost all the ledgers have been prepared. Let us go and open the trial balance. Let's do it one by one. The first item is cost ledger control account. This cost ledger control account, if you notice, we have closed it like this, to balance carried on. It means we'll have by balance brought down. We'll have by balance brought down. How much? 9,49,025. So we can say this has a credit balance. Okay. So the first item is cost ledger control account with a credit balance. So this should be credit, and amount we can pick up from here. Let's say 9,49,025. Then the second account what we have is stores ledger, where we have closed on the credit. It means to balance brought down is 2,94,220. So that's what should come here. What is the account? It is stores ledger control account, and the balance is 2,94,220. So that is taken care. Then the next account what we have is work in progress control account. Let's write that. It is work in progress control account. Let's see whether it is debit or credit. Probably here. Yeah. So we have written by balance. So it is to balance brought down. We have debit balance 1,66,575. So that is 1,66,575. Similarly, we have finished stock ledger control account. And let's find out the balance. Finished stock ledger control account. So we have captured in credit. It means it is debit balance, and the amount involved is 2,82,270. So we can show that it is this 2,82,270. Then what else we have? Then we have this manufacturing overhead control account. Let's capture manufacturing overhead control account. And what is going to be the amount? Let's see. Here we have closed with credit, so it is having debit balance. We'll say to balance brought down, it is 25,450. So we'll say it is 25,450, and wages have been closed. Then what is still pending is this cost of sales account. So we'll say cost of sales account, and let's check. We have closed with by balance. So to balance brought down, it is 1,80,510. Okay. So let's pick up 1,80,510. So now I believe we have captured most. Let me check the arithmetical accuracy by totaling the debit and credit. Debit total 9,49,025. Credit is also same. So we have completed the trial balance as well.